Hello everyone, welcome to another video. In this video, we're going to be looking at the London session trading strategy that I'm going to be teaching you guys. So this is going to be a trading model for the scalper in you, right? And it is vital to understand that you need to follow these rules. If you don't follow these rules, you are going to get simply FUCKED, all caps, all right? So we're going to be looking at mastering the London session. All right. Now, the ingredients for the London session are as follows. You are looking at the London macro of mine between 3:40 a.m. Eastern Standard Time to 5 a.m. Eastern Standard Time. All right. Then in this time, or just before this time, leading up to this time, you want to see price coming off of a key level in terms of Malaysian support and resistance. For those of you that don't know what Malaysian support and resistance is, it's something you can learn on my mentorship, or you can find it online on YouTube, right? So you have these types of break and retest levels, which ICT copies, and then you have the QM levels, like so, and then you have the gap levels, like so. All right. So you need to use the key level, which is based on Malaysian support and resistance. If you have SMC background, ICT background, you can use key levels from them as well. And if you are doing that, it has to be 1 hour, 4 hour, and above. All right. Then we will take a look at the reversal signature. If you are in my public Telegram group, I have sent you guys a reversal signature. I will show it to you in this video as well. And after that, once that forms, you're looking for an inverse fair value gap formation. Okay, so these are the ingredients. Now, what is the recipe? The recipe is as follows, right? You wait for the macro timing, you wait for the key level, you wait for the reversal signature, get the IFVG formation, and you put your TP at 3 standard deviations of the manipulated range. Okay. Alternatively, you can use the trade easy algorithm, get the bias, get the entry, and take a trade. Okay. So now let's take a look at some live examples. Okay. All right. So first of all, what we're going to do is we're going to delete everything on the chart. Okay. As you can see down here, I now have an objective way of determining what is manipulation and what is accumulation, which will then help me take trades like so. And that can help you take trades like this as well if you are a trade easy user. All right. I will give you guys a glimpse of this at the end of the video if I remember. If not, then you gotta wait a bit. Okay. So let's take a look at the London trading model. Okay. So what we'll do is we will take a look at yesterday's price action on Bitcoin. Yesterday there was a nice buy on Bitcoin, right? So first of all, what's the recipe? Recipe is wait for the 340 to 5 time interval here. Price is coming off a key level. Now, on the 5 minute or 3 minute, you want to see price form an inverse fair value gap. And the bias is also bullish. Okay. So Asia is a manipulation, as you can see down here. Asia is a manipulation. So that means London will distribute. Here also you can see. All right. Now watch. So you're looking for IFEG formation. Yeah. So right now, right over here, what do we have? We have no inverse fair value gap formation, and this time period is ending. So I'll go to the 3 minute chart. 3 minute chart, here's what I can see. Okay. So I can see the price is going up, coming down. Here is a inverse gap, like so. All right. Now, when price is trading through that, what you will do is you will immediately buy. Okay, because you know it's an inverse gap. Why? Because this wick reacts from this gap, and when price trades through it, it becomes a inverse gap. Stop loss is below this low. Okay. Take profit is going to be 3 standard deviations of the manipulated range inside this 340 to 5 interval. That is going to be here. Okay. And at 2 standard deviations, you will be taking partials. Oh, you can enter again here. It's okay. See what happens. Okay. So you're taking 80% off. And the rest looks like it's hitting break even. So that's one example. All right. So now what we'll do is we'll go and take a look at another example. Let's say this time we look at gold, for example. Okay. So on gold, on this, let's go to another day. I want to look at the same day. Let's see over here. Go back, go back, go back, go back. Let's come here maybe. Okay. So over here, what do we have? We have bias being bullish, but when price traded through the Asian low, this is invalid, right? So it becomes a bearish bias. Now what we can see is at 340, here we are. We want to see price going to a key level, or it has to be coming from a key level. Of course, when price is breaking through these levels, these fractal ranges, it means that it is coming from a key level already. Listen carefully. And price is breaking through the boxes that I have on the chart. It means that it is already moving from a key level, meaning it is coming from a key level. Okay, it is coming from a key level, so I am not worried. So now all I need to do is say, okay, you know what? I'm looking for an inverse gap formation. So let's do something. Let's look at the 3-minute chart. And on the 3-minute chart, let's see if we can find anything. And look, again, the Asian session is a manipulation. So London is a distribution. So I know it's going to go down. Okay. So we have a reaction there. In this very small redelivered rebalancer as a reaction. If we close, okay, we closed. So what I'm going to do is I'm going to take a sell immediately when it trades down, goes up and trades down, right? You would wait for the close, of course, but sometimes with IFVJs, if the order flow is too strong, you're not going to get an entry. This is what I will do. And if price comes back here, yeah, price comes back there, you can take a sell. And what is my TP? My TP is going to be the manipulated range that occurred in the 340 to 5 range. So that is technically this one. So I'll do this. 3 standard deviation is your full TP. 2 standard deviations here, which is 2. 4 means 3, 3 means 2, okay? At this point, you are going to be taking 50 to 80% off. So there, wait. There you go, you're taking 80% off, or I would be taking 80% off. I don't know about you, but since this is a rule-based system, you would have to do the same thing that I am advising you to do. All right, so we want to be taking 80% off, and after that, you want to see whether price hits the full TP. So let's see what happens. Stop loss at break even, and I think break even hit. Yes, so in this case, break even hit. Why is that the case? Why is it that we are plagued with such a problem in this regard? Because when you look at it, can you see how you had 2 levels of manipulation here, manipulation, right? So when this London session is a manipulation, okay, you have to see whether London is coming from a key level or not. So this, of course, should be a key level. So if this is that manipulation to come down, okay, then we need to understand that this is going to be a distribution, of course, going to be a distribution. So when we come here, we're going to be talking about another macro later on. Not in this video, in another video, we'll be looking at the New York session macro, whereby you can take a sell inside the New York session. Okay, right there. Then this ends. Here, it ends. Okay. All right. Now, let's take a look at another asset. Let's say NASDAQ. Okay, on NASDAQ, what we can see on this day, this particular day, here, this one, what do we have? I think this is Tuesday. Tuesday was fine, yeah. All right, so let's come here, 340. The bias, let's say, what is this? What is it? Bias is bearish. Asian session was accumulation. London is manipulation. Okay, so bias is bearish. This is a classic AMD. So we need to see price go up. Right, because London is supposed to be a manipulation because Asia is accumulation. When we take out the Asian low, we are expecting to see price trade higher and at least come at or above the Asian high. So in this case, 340 is here. Let's play this. Find an IFVG. Let's go to 3-minute chart. The lowest time frame we want to go to. Okay, and we have an inverse, potential inverse here. Okay, we wait there. You will buy here, of course. Stop loss below that IFVG candle there. Okay, and you are going to be utilizing the manipulated range inside of this level, inside of this range. So that is this. Why not this? Because there's no swing high, unless there is. Wait, let me see. There's a swing high, my bad. Okay. and your full take profit is number 4. Your passes will be at 3, which is 2. So 3 standard deviations and 2 standard deviations. So almost that partial, there we go. So you take 50% to 80% off and remainder hit full TP. Okay. So now what we'll do is we'll go one step ahead and let's take a look at the next day, next trading day. Okay. And you might be a bit confused because Sean, you said now accumulation, manipulation, distribution. Yes. Okay. So accumulation, manipulation, distribution, then the continuation. Now think about it like this. The London session was also classified to be a manipulation, meaning if the London session comes up, then hits a key level, okay, hits a key level there, somewhere around here, that is the manipulation. Then that is the turning point, meaning there is a if this then that scenario, right? We can say that okay, this is the key level, price goes up, and this is also potential key level, price goes down. So if price hits a key level here without hitting that high, then the cycle or the sequence resets, whereby this is the manipulation and the New York session is going to see a distribution down. And this you can utilize with the New York session macro, or you can utilize it with the daily macro, which is from here to here, 540 to 11. You'll see that you'll be able to take a really nice sell if you understood and if you saw that, yes, this is my manipulation. And also my daily bias is bearish. So I'm inclined to see this as a manipulation. So everything is there. All the information is there. I can utilize this information properly. So I hope you understand what I'm saying. All right. So for this daily macro, you want to use the 15 to 5 minute. 5 minute is your minimum time frame for IFVG setup, and 15 minutes is the highest time frame. For the session, it is M3 to M5. All right, so let's take a look at the next day. So let's go. So on the next day, what is our sequence? Our sequence is Asian session manipulation. All right, bias is bullish. So the time interval is incoming. So let's see. Okay, there. Now Asian session is bullish. Sorry, the daily bias is bullish. The sequence that we're looking at is Asian manipulation. So manipulation, distribution, continuation, right? So the distribution for the London session should be to the upside. So now what we're looking for is same thing. We're looking to see whether we have IFVG. If we break the fractal range, it means that a key level has been hit. And now we'll check and see whether this is indeed the case with an IFVG. Because we can see here that we hit this redeliver rebalance and we need to invert it. And no longer. So now we're waiting for a new one to form, which is this. Okay, it has to be inverted. Okay, inside that time interval. So this also no. Now we have this. See, we won't make any mistakes now because we're waiting for something to happen. Waiting still, almost. Okay, yeah. So what will you do? When it trades through that, we're gonna buy. Stop loss below the IFVG candle here. Okay. The what do you call the range, manipulated range is what? This high to this low. You're gonna go there, full TP, here, partials. Let's see if it happens or not. So by now, stops at break even. Now you'll be thinking, do I take partials or not? Do I take partials or not? If it was me, I'll just take 50% off, stop loss at break even, and everything hit break even, right? Now, why is this the case? Because now look at this. The London session ended up being a manipulation throughout the entire day, all right? Ended up being a manipulation throughout the entire day. That means this run up must have hit a key level on the left, right? So when you have that double manipulation classification, chances are that at the end of the day, you're going to get a reversal. So you get what you can during London, and when you get the double manipulation, when you see that when you see that there is a key level that's about to be hit, chances are there's going to be a reversal. Okay. Now, I'll show you a case in which that is not the case, right? If you take a look at gold, and this is something that you will get in the Trade Easy group, right? So I just released it today. I just made it today. So it's something you get in the group. So the only way in which you're going to get a nice clean run like this in the New York session, which the algorithm called, by the way, is when the London session turns out to be an accumulation. Now we know that the London low is 2 o'clock to 6 o'clock. So whatever highest high, lowest low, that's the London parameters. So the lowest low is here. That's the 2 o'clock low. And the highest high is, of course, here. So this entire thing is the London range. When price hit that, that is the manipulation. Meaning, if London is the accumulation, then New York is going to be the manipulation, the distribution. So for the entire day, Asia manipulation, good, low is set. Then London starts the distribution. New York session is going to be the continuation, and the PM session is going to be an accumulation. So you don't want to touch the PM session because you know it's not going to yield good results. Or in fact, this is going to give you like a counter trend move if a key level is hit. So this is a perfect example of manipulation accumulation. I can look for a sustained run, but if it is manipulation, chances are there is going to be a very deep run back into the range or complete reversal. This is from yesterday. So here, yesterday, here's what we have. Manipulation going up. That's a nice buy, okay. And then London is an accumulation. So if London is an accumulation, then if you consider the London range, here the London high, and here the London low. So that's the range. Then this is that accumulation. New York session is manipulations, deep damn manipulation, right? There. Okay. Listen carefully. Manipulation, distribution. For the entire day, the schematic is manipulation, distribution, New York session, continuation. So it's sure the New York session comes down or really, really deep down, right? Doesn't change the fact that it's a continuation. Okay. And because this reaccumulation happened very early on, the chances of the PM session being an accumulation that goes even deeper is invalid because it has done its move, it has done the PM session move also. So now it's just going to set up for longs. Right now, watch carefully. Accumulation. If this is bullshit, it should not work, guys. So accumulation, manipulation, and then distribution. So we should see price come at least to previous day high. This day's high today, we should have seen price come at least to that high, if this is the case. So let's see if I'm telling the truth or not. I mean, the algorithm is showing it. You saw it's automated, so boom. Nothing else to prove in it. This is everything that you see here. Everything that makes ICT subjective is no longer subjective with my tools, with my algorithms, because it's Sean, man. Come on, I do the best shit there is over here because I'm the creator of everything. So there's a mini AMD here, accumulation, manipulation, distribution. There. See that? Now, so I said, but come at least here, right? Because that's the accumulation, manipulation, now distribution here. And then once that is done, it should be in time with the PM session for today, where in which price does nothing. It accumulates, this reaccumulates. Come back down to the range. Done. Kalas, finished. Kal chaka blast. All right. So I hope you understood. I hope you found this insightful. And if you are interested in the Trade Easy algorithm, of course, we are having the lifetime offer still going on for another 10 more days. It ends on 31st of December. Get that, or otherwise you got to get on the waiting list for the Signal group. Link is down in the description below, a form. And what else is there to say? Yeah, all these algorithms are there for you to use. Difference between the people that are in my group and the difference between the people that are in other people's group is this, that my people find more success than other people. Otherwise, the other people from the other people's group won't come and ask me what my mentorship prices are. They won't come and ask me for free trials. But that's exactly what has been happening. People are coming to me, asking me for free trials, asking me when the next mentorship enrollments are. Well, guys, I only have one-on-one, and I'm literally asking you guys to join every day for the Trade Easy usage, right? Application usage. So be sure to get it. Or you can definitely send me a message on Telegram to get everything that you need for Trade Easy. And what else is there to say? Nothing much. So I hope you found this insightful. Please do backtest, please do study, and please do send me your successful trades. That said, Good luck in good trading. Bye bye.